Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Carlton English, in for Jack Otter. Coming up, employment data for September shows surprising strength in the economy. I'll ask KKR's Henry McVeigh what it means for investors and what to do as bond yields climb to their highest level since the financial crisis. Then, obesity drugs and Medicare price negotiations making big waves in the market. Our expert panel dives into which stocks to consider to cash in on healthcare. And later, small cap stocks have been in the dumps for a decade, why there's reason to believe a turnaround is at hand. But we begin, as always, with three things investors ought to be thinking about right now. Markets ending the week up after September jobs data blew past expectations despite high interest rates and dysfunction in Washington. Food stocks are getting slammed as new obesity drugs weigh on the market. But is that creating a buying opportunity? And travel trends taking a new turn as Americans opt for simpler, calmer experiences rather than adventure vacations. And it's spelling good news for leisure companies. On the Barron's Roundtable, my colleagues Ben Levisohn, Andrew Bary, and Elizabeth O'Brien. So Ben, this week in the market, my stomach was up, it was down, and I mean, that's just usually, but tell me why this week was so tough.
Well, Carlton, I was going to describe it as head spinning rather than stomach churning, but it's all basically the same thing. I mean, it really did look like the market was on the point of breaking down hard. We had yields surging. We got this jobs report that was far stronger than anyone expected. And then all of a sudden, the market was okay with it. We had the biggest turnaround in the market since March to finish positive after being down around 1% in the S&P 500. And I think it was just a question of the market already having responded to interest rates. Bond yields had already gone up so much, the market had fallen so much that how much more can you fall? And so it looks like it's ready to move on and care about something else.
Okay, you say the market is ready to move on, but when you're looking at bond yields at highest level in about 16 years or so, are we really ready to move on? What are you paying attention to there?
I'm going to get a little wonky here. I'm paying attention to the equity risk premium. It's basically how much extra kind of yield you're getting for owning stocks over treasuries. What's interesting is that it is about the same now as it was back at July 31st when stocks were at their highs. And that tells me that the market has really adjusted fairly quickly, almost in real time, to what happened with yields. And so now if yields can kind of stay where they are, I think the market's done what it needed to, and it can move on to other issues.
So other issues, what are you looking at next week?
I'm looking at earnings. We're going to get earnings from companies like Delta Airlines. We're going to get the big banks, JP Morgan, Citigroup, and Wells Fargo. And really, I think it's earnings that have to do the heavy lifting here now. We had a number of quarters where earnings were negative, and it's actually just turned positive year over year. I think the problem is that raises the bar. The companies really do have to beat, and if they can, great. If not, we could see a pullback in the market continue.
And another thing that's been going on, we do have a return of IPOs. One of our colleagues, Teresa Rivas, likes to write about what she calls the ugly shoe index. What do we have coming down the pike?
We have Birkenstocks, which got a lift from Barbie and some other things, and they're having their IPO. They're pricing it fairly aggressively. I think it's going to be a test of the market again. If this is well accepted by the market, if it's well received, I think that's a good sign that this trouble that we've had over the past month and a half, 2 months, is largely past us.
Gotcha. So, Andrew, big story of the year, big story in tabloids. It has been weight loss drugs from companies like Eli Lilly and Novo. Just curious, because it seems like they're affecting more than the healthcare companies that have been upset by it earlier this year.
Well, America is becoming an Ozempic nation. There are more than 100 million Americans who are obese, and they're beginning to embrace these diet drugs. Wall Street now is focused on the downside, what companies could be losers from this. And Walmart this past week said that people who buy these drugs are consuming less food or buying less food, and that helped lead to a broad sell-off in food stocks this past week, particularly makers of salty snacks and junk food and soda and beer. You saw big sell-offs in Coke, Pepsi, Mondelez, Anheuser-Busch, and many of these stocks were down over 5% and hit 52-week lows.
So do you bet against these stocks, or is there room for upside?
I think particularly, look at PepsiCo and Coke. They're down 5% this week. They're yielding about 3% plus, 20 times earnings, and I think their businesses are very durable. I would not bet against the American eater, and you basically have maybe 1 million or 2 million Americans on these drugs right now. Even if it grows dramatically, don't think it's going to have a big impact on these companies and their sales.
Don't bet against the American eater. I love it. So, Elizabeth, Last year, 2022, was the story of revenge travel. You're finding that something else is playing out in the markets now.
Yeah, people are burnt out from revenge travel, and we're seeing the rise of bliss travel these days. People want a stress-free, relaxing vacation. Another trend we're seeing more of these days is bleisure, which is business plus leisure. You know, if you have to travel, if you have to get on a plane for work, you might as well tack on a couple extra days to relax, you know, me time for yourself. Marriott's getting in on the act, and they're talking about, believe it or not, sleep tourism, which is a thing. You know, they're talking about the importance of their guests' sleep experience. And cruise lines could be another beneficiary of this relaxing travel trend. Analysts have their eye on Royal Caribbean as one of the top picks.
So you're also finding that there's a unique play that can be made on European travel. Can you tell us quickly what that is?
Sure. It's Booking. It's a hotel booking site that has the largest market share in Europe.
Gotcha. And I'm guessing it's because the fragmentation of the European hotels are a little bit different.
Exactly. Unlike in America, where we have large chains and it's easy to book directly with those chains, the market in Europe is more fragmented, more mom and pop hotels. So Booking has a corner on that market.
Gotcha. Thank you so much.